Welcome to our comprehensive Euro to Canadian dollar analysis report, covering October 6th through 11th, 2025. In this presentation, we'll dive deep into the Euro-Canadian dollar pair, examining technical indicators, fundamental news, and market dynamics that shaped price action during this critical period. We've gathered data from 5 major Forex sources to provide you with the most accurate and actionable insights. This analysis was prepared on October 13th, 2025, and reflects the latest market conditions. Let's begin our journey through the Euro to Canadian dollar landscape. Our analysis draws from 5 premier Forex data sources to ensure comprehensive coverage and accuracy. We've consulted TradingView for real-time price action and technical indicators, investing.com for multi-timeframe analysis, actionforex.com for fundamental market insights, forex.com for professional trading perspectives, and Daily Forex for additional technical confirmation. By synthesizing information from these diverse and respected sources, we've created a well-rounded analysis that captures both the technical and fundamental aspects of Euro to Canadian dollar price movement during our analysis period. As of October 14th, 2025 at 11:16 GMT, EUR CAD is trading at 1.62557 Canadian dollars, showing a modest daily gain of 0.00139 or 0.09%. The pair opened at 1.62358 and has traded in a tight range between 1.62203 and 1.62830 throughout the session. The previous close was 1.62418, and we're seeing relatively light volume at 45.64 thousand ticks. This price action suggests consolidation near current levels, with the market digesting recent news and waiting for the next catalyst to determine direction. Looking at EUR/CAD's performance across multiple timeframes reveals a compelling bullish story. While short-term movements show modest gains of 0.09% over 1 day and 0.21% over 5 days, the longer-term picture is significantly stronger. The pair has gained 0.15% over the past month and an impressive 2.92% over 6 months. Year-to-date performance stands at a robust 9.18%, while the 1-year return reaches 8.08%. This consistent upward trajectory across multiple timeframes demonstrates the strength of the bullish trend that has characterized EUR/CAD throughout 2025. Our multi-timeframe technical analysis reveals a predominantly bullish bias across most time horizons. The 30-minute and hourly charts both flash buy signals, while the 5-hour timeframe shows a strong buy indication. Interestingly, the daily chart remains neutral, suggesting some near-term consolidation. However, both weekly and monthly timeframes display strong buy signals, confirming the longer-term bullish trend. The overall technical rating is buy, supported by both technical indicators and moving averages pointing in the same direction. This alignment across multiple timeframes provides confidence in the bullish outlook. 3 major news events shaped Euro to Canadian dollar during our analysis period. First, Canadian employment data released on October 10th shocked markets with 60,400 jobs added versus expectations of just 5,000, while unemployment held steady at 7.1%. Manufacturing jobs rebounded for the first time since January, reducing rate cut expectations. Second, French political turmoil intensified when Prime Minister Sébastien Lecornu resigned on October 9th, marking the 5th resignation in 2 years and weighing on the euro. Finally, WTI crude oil fell below $60 per barrel, but the Canadian dollar remained resilient thanks to strong employment data offsetting typical oil-related weakness. The Canadian dollar demonstrated remarkable resilience during this period, holding its ground as one of the month's best performers despite oil price weakness. The manufacturing job rebound proved particularly significant, representing the sector's first monthly gain since January and signaling renewed momentum after a difficult summer. Looking ahead, markets are focused on the October 21st CPI report, with inflation needing to print well below expectations to justify another Bank of Canada rate cut on October 29th. Current data flow suggests the central bank will likely pause after September's 25 basis point cut, supporting the loonie's strength. For short-term traders looking at a 1 to 2 week horizon, key support levels sit at 1.6200 and 1.6170, while resistance stands at 1.6370 and 1.6400. The outlook remains neutral to slightly bullish, as the pair tests key support at 1.6200, along with a rising trend line. Mid-term traders focusing on 1 to 3 months should watch support at 1.6070, 1.5970, and 1.5669, with resistance at 1.6470 and 1.6500. The bullish trend shows signs of exhaustion, and a break below 1.6160 would signal a potential correction. However, the overall trend remains intact, offering opportunities for both trend followers and range traders.